All right, here are the basics of options trading, and we're gonna go over how to make money two different ways with a little story. Hey, I have 100 shares of stock. Each of them are worth $51, but I'm worried about them going down in value. That's $5,100 total, and I'm thinking about selling. Would you bet $100 that those shares are gonna go below $5,000? If it does, I'll buy your 100 shares for $5,000. So if the shares go up, I keep the profits. And if they go down, you buy them? That sounds like a win-win. And it only costs $100? Yep. Okay, I'll take that bet. Back again? Yep. I bet again, these shares will go down. I bet they won't. Hey, those shares are 4,700. Cool. Here's $5,000. I'll take those 100 shares. Hey, those shares are going up again. I don't want to miss out on any of the gains. I'll bet $100 they'll be over 5,100. All right, I'll take that bet and I'll sell you 100 shares for $5,100 if the price goes over 5,100. All right, those shares keep going up. I bet $100 they'll be over 5,100 by the end of the week. Okay, I bet they won't. Hey, those shares are worth $6,100. That means I won the bet again. That's fine. I still made $500 this month. How? I also became $500 richer this month. Okay, let me break it down and simplify. It's called a put when I put up my capital and you pay me $100 to take over that risk. I did that twice. Then after the second time, I lost $300 worth of equity. So I profited $200, but then I lost $300 of equity. But here's the thing, I didn't sell the shares yet, so I did not realize the loss. When I started selling you call options, right, I also profited another $200. So in total, I've received $400 from option premium. When the price went above 5,100 is when I no longer am receiving any equity gain, but I did sell it to you for $100 more than I purchased it at, leading me to a net $100 realized equity profit. In total, that's $500 profit to me. Now, how did you profit by $500? Well, it's very simple, okay? You put up $200 in purchasing puts. You saved yourself a $400 equity loss, but you did lose $100 in equity because your stock was worth $5,100, but you sold it for $5,000, meaning that in net, you lost $300 instead of losing $400. Losing $300 is better than losing $400, so you did technically win the bet. On the calls, eventually what happened was the stock rose above the strike price. So you purchased $200 in calls. Well, between the $200 that you paid me in puts and the $200 that you paid me in calls, that's a $400 loss. Plus the $100 equity loss that you took in the beginning is a $500 loss. But when those shares became worth $6,100, you are currently sitting on a $1,000 equity gain. That $1,000 equity gain cancels out all of your losses and you're still sitting on $500 of profit. But here's the catch. You now have to find a buyer for those shares and the buyer has to pay $6,100. Otherwise, your equity gain is not realized in profit yet. Okay, so who's going to buy my shares so I can realize my $500 profit? Not me. Yeah. We should totally add this one to your portfolio. It's been up 20% this month, and I think it's just gonna keep going. There's no way we're too late on it. I think that guy over there will find someone to overpay, no problem.